You have to wonder, how does a company actually survive for over a century? But more than that, how does it thrive? I mean, growing right through market crashes, booms, and huge tech shifts. Well, it all comes down to having a long-term strategy. And today, we're going to look at a company that is an absolute master of the long game.
All right, let's dive into Washington H. Soul Pattinson, or WHSP for short. If just one number could tell their story, it's this: 10.8%. Just think about that. That's the average growth of their dividend payout every single year for 2 straight decades. That kind of consistency isn't just luck, folks. It's by design. And look, you don't have to take my word for it. This is straight from the chairman's review. This isn't just some mission statement they hang on a wall. This is the principle that drives every single decision they make: capital growth and steadily increasing dividends. So the big question is, how are they actually pull it off?
So here's our game plan for this explainer. We're going to look at their century-old philosophy, pop the hood on their investment engine, check out the year's big winners and losers, untangle a pretty high-stakes telco drama, and then, finally, get to the bottom line.
Okay, first things first. Let's get into the foundation of it all. WSP's entire approach isn't built on chasing the latest trend or what's hot this quarter. Nope. It's built on a very specific, time-tested philosophy. Now, the magic word here is uncorrelated. It's kind of like building a well-balanced meal, right? You don't just load up on carbs. You need protein, veggies, the whole deal. WHSP invests in a mix of things that don't all move in the same direction. So if one area has a really tough year, another one can pick up the slack. It's all about creating balance and, honestly, taking a lot of the risk out of the equation.
So that's the theory, but what does this diversified engine actually look like when you pop the hood? Let's take a peek.
These are the 4 main pillars of the whole machine. You've got public companies, private businesses, actual physical property, and corporate loans. This mix gives them a ton of flexibility to find good deals no matter what the market's doing, and it makes sure they never have all their eggs in one basket. And this, right here, is the perfect illustration. On one side, you have TPG Telecom, a company all about data, mobile networks, the digital future. And on the other, New Hope, a huge coal mining operation. I mean, talk about different worlds. These businesses could not be more different, and that is the whole point. That's what uncorrelated looks like. Which brings us to 2019, a year that was, frankly, the perfect real-world test for this whole strategy. It was a year where some parts of the business were absolutely soaring, while others were facing some serious challenges. It's a true story of balance in action.
First, let's talk about the high point. In 2019, the absolute star of the show for WHSP's portfolio was, without a doubt, property.
And we are not talking about a small win here. The property portfolio, which got a big boost from their investment in Brickworks, delivered a record amount of money, jumping an incredible 157%. This was all because they finished and sold some major projects, which just injected a massive amount of cash into the year's results. But, for every big win, there's often a flip side. And in 2019, that challenge came from their mining assets, and specifically a company called Round Oak Minerals. Now, what's really important here is that this loss wasn't just because the market was down. No, the report points to very real-world problems, things like delays with startup costs, made even worse by extreme weather events causing flooding. I mean, you can't predict a flood, right? And that's exactly the kind of unexpected hit that could absolutely cripple a company that wasn't so well diversified. So you've got risks like floods, but then there are totally different kinds of challenges, the ones that come from the outside, which is exactly what happened with one of WSSP's biggest holdings, TPG Telecom. Man, this was a whole corporate soap opera. TPG announced this huge merger with Vodafone, a deal that would have created a new giant in Australian telecom. But then, out of nowhere, the regulator steps in and says, nope, we're blocking it. That kicked off a massive legal battle in federal court, which left the future of this huge deal and a key investment for WHSP totally up in the air for months. Okay, so let's recap. You've got record profits from property, huge losses from mining, and a massive legal drama with the telco business. After all that chaos, where did they actually land? What was the final score for the company and its shareholders? Well, this one number pretty much says it all. Even after taking a $54 million hit from the mining business, the company as a whole still delivered over $307 million in profit. The strength from property and their other investments just completely absorbed that loss. And of course, that profit goes right back to the people who own the company. The total dividend for the year was 58 cents per share, which just continues their incredible track record. And this takes us right back to that mission statement from the beginning, steadily increasing dividends. I'd say mission accomplished.
So, when you step back and look at their entire year, what's the one big lesson we can pull from all this? What's the key takeaway?
It's actually really simple. Their strategy just worked. It did exactly what it was designed to do. That diversity acted like a giant shock absorber. It weathered floods, regulatory battles, and all kinds of setbacks to deliver exactly what it promised: strong, steady returns.
And that kind of leaves us with one final thought, doesn't it? In a world that is so obsessed with short-term results in the next headline, maybe, just maybe, a patient, 100-year-old strategy is the ultimate competitive advantage. Based on the evidence, it's pretty hard to argue with that.